Hey everyone, welcome back to The Mind of Chase. In today's episode, I'll be detailing exactly how I pay myself first. I use personal capital to track the investment portfolio portion of my net worth. My investment portfolio is currently at $96,800 as of December 9th, 2019. I have 2 retirement accounts, a 401k with Fidelity and a Roth IRA with Vanguard. I also have 2 taxable accounts, one with Vanguard and one with M1 Finance. So without further ado, let's do this. I just love using personal capital to track my investment portfolio because it provides such a neat layout of my holdings and asset allocation. When you first log in, you'll be able to see your portfolio balance at the top left. This is my investment portfolio portion of my net worth, and all the different accounts are linked below. I'll be blacking that out so that I can protect my identity, of course. On the top right here, you'll see all these different tabs. My favorite view is the allocations tab. Invested cash in my Vanguard account is still my largest holding at this very moment, while I continue to keep tabs on market data as it materializes. Cash in my Vanguard money market fund, VMFXX, yields me some partially tax-exempt dividends, which is fantastic. For example, last month I was paid over $40 for keeping my cash with Vanguard, and that's better than most high-yield savings accounts. And let's click on the U.S. stocks section here. As a value investor, value stocks make up the majority of my U.S. stocks portfolio. Names like, Discovery Financial, we have Cisco, Walmart, and of course Fidelity's S&P 500 fund FXAIX includes large cap value stocks. Some growth stocks that I track are the common ones like Amazon, we have Google, we got Visa, as well as Facebook. Personal capital calls large cap blend, they call that large cap core. So in my blend stocks portfolio, these names are like Texas Instruments, we got Apple, as well as Disney. Maybe you noticed as I click on this international stocks, and let's click on the developed world in the international stocks portfolio. Maybe you noticed that VSMGX, which is Vanguard's Life Strategy Moderate Growth Fund, has exposure to both US and international stocks. I absolutely love the Life Strategy Vanguard suite. There's 4 total funds, and there's exposure to US and international stocks and bonds, all in a single fund. A few international developed market stocks include Unilever and BAM, which is one of my favorite companies to follow right now and one of my best performing stocks. I intend to increase exposure to emerging markets. Here on the right side, you can see it's a very small slice. A great fund for that would be Vanguard's ETF called VWO. Having just turned 30 last month, I'm a cautious investor. The next recession, whenever that may be, will be my first one. I have a long-term horizon, so I continue to grow my cash pile at the same time that I contribute to my other investment accounts. If you have a long time horizon, as I do, there's absolutely nothing wrong with building cash, especially this late in the market cycle when US valuations are sky high. Of course, you would want to do your own research, do your own due diligence, And remember, Warren Buffett's #1 rule is never lose money. Next, I'll be explaining how I pay myself throughout the year. Here's a summary of my retirement accounts at Fidelity and Vanguard. I have a total of $27,332 in my 401k, which accounts for about 28% of my total investment portfolio. My Roth IRA at Vanguard, that balance is about $8,971, which comprises 9% of my investment portfolio. I'm in the process of transferring my American Funds IRA from a few years ago that I started over to Vanguard. I do not recommend American Funds to anyone. They charge tremendous fees that eat away at potential gains. Now, here's a summary of my taxable accounts at Vanguard and M1 Finance. I have about $41,649 in my Vanguard taxable account, and that comprises of 43% of my total investment portfolio, which makes it the largest holding in my investment portfolio. I have about $16,686 at M1 Finance, which makes up 17% of my total investment portfolio. Let me break down what I do with my money every time I'm paid. I get paid by my primary employer every 2 weeks or bi-weekly. The 2019 401k maximum amount is $19,000 per year. There are 26 pay periods in a single year, and that means $730 is automatically deducted from my gross paycheck before my taxes are deducted from my paycheck. 60% of that $730 goes straight to the S&P 500 index fund at Fidelity, and 40% goes towards the US bond index fund. I contribute to my Roth IRA every single Monday. The 2019 Roth IRA maximum is $6,000 per year. There are 52 weeks in a single year. That means $115.38 is automatically deducted from my checking account every Monday. Contributions, not gains, can be withdrawn and will grow tax-free since Roth IRA contributions are made with after-tax dollars. My single fund is VSMGX, Vanguard's Life Strategy Moderate Growth Fund, which tracks 4 different funds: the US and International Stock Market Index, as well as the US and International Bond Market Index. I love the Life Strategy suite. There's a total of 4 different Vanguard Life Strategy funds. The funds automatically maintain an asset allocation. This one in particular, VSMGX, maintains 60-40 throughout permanently. And you should check out the other 3 Life Strategy funds on Vanguard's website. I contribute to my Vanguard taxable account every Monday. There's no maximum contribution limit for a taxable account, but all dividends are taxed in the year you receive them at the qualified dividend tax rate of 15% or at the ordinary dividend tax rate, which is your federal income rate. Any short-term capital gains, if you sell or realize your profits, are taxed at your federal income rate. So that means hold your investments for at least a year to lock in the long-term capital gains tax rate, which is 15% for most investors. So I'm contributing at least $250 per week to my Vanguard taxable account, which is currently just Vanguard's default money market fund, VMFXX. So if you do the math, you will arrive at about $13,000 per year that I'm contributing. I contribute to my M1 taxable account every Monday as well. I've reduced my weekly contributions recently, and I'm now contributing about $120 per week, which is $6,240 per year. If or when prices begin to drop, I will be increasing contributions to about $300 per week, and that's going to lower the cost basis of my stocks that I hold. That means lowering my cash contribution in my Vanguard taxable account, since I'm dialing up my M1 finance contributions if and when stocks begin to drop in price. Saving more than you spend is one of the main ways to accumulate wealth over time. Having multiple sources of income is another great way to grow your net worth. I have one full-time job and one part-time job that allows me to work remotely. I also consider my investment portfolio as a source of passive income. So what's the actual dollar amount that I pay myself throughout the year? Well, let's break that down. In terms of pre-tax retirement contributions, I pay myself $1,581 per month. In terms of after-tax retirement contributions, that totals about $500 per month. At the top is my 401k, and at the bottom is my Roth IRA. In terms of my taxable contributions in my Vanguard taxable account, which is $250 per week, and my M1 finance account, which is $120 per week, that total is about $1,600 per month. Thus, I pay myself a grand total of $3,684 per month, which is $44,219 per year. To get ahead in life, always pay yourself first. To conclude today's video, I'd like to ask everyone, what's on your watch list? Do you have any suggestions for stocks, ETFs I should be buying? Any reasoning behind that? And as always, if you have questions, feel free to comment below and or email me at themindofchase@gmail.com. Look in the description below for a free copy of my Google Sheets portfolio tracker document. All you have to do is update the fields in blue, and that's free for your own personal use. Please like and subscribe for future videos, and good luck. Happy investing, everyone.